Yeah, so basically, the chances that this conflict will not have a material effect on the world economy is now a big zero. That's the kind of high level bad news is from everyone that I read and pay attention to, the impairment that has already happened now, which we still really haven't felt, right? All the stuff that we've talked about in the market's reaction, markets are forward looking. So this is what they're anticipating. We actually haven't felt the shock really yet, right? That's coming. But what's already baked into the cake is not good if it were to stop today.
All right, welcome back to another episode of The Weekly. Today is Monday, March 16th here in East Asia. On The Weekly, we cover the biggest stories in the Bitcoin and crypto realm. And this week, as it has been the case for the last few weeks, we're going to have to focus on the Iran war and its geopolitical and economic implications, because that is what is driving the markets right now. So David, kick us off. We're going to run through some of the events, the bigger events that have happened over the last week, just to set the stage, I guess.
Yeah. Okay. So this week or last week, things kind of kicked off with reports that I'm going to butcher this fella's name. Mojtaba Kamani, the former supreme leader's son, had emerged as the new supreme leader. At the same time, the conflict's center of gravity, which had been focused on attacking infrastructure and kind of city civilian targets, moved away from that and sharply focused on the Strait of Hormuz. So this is the War Hormuz edition, if you will. And that was on March 9th, Monday, last week. By March 10th, Iran had threatened to block the Strait of Hormuz in retaliation for the U.S.-Israel strikes. The U.S. military said it had destroyed 16 Iranian mine lane vessels, and all of this kicked off global markets experiencing extreme volatility and rising energy prices. March 11th, 3 commercial vessels were damaged. I don't know if you saw these images on X or other media outlets. They're suspected to be Iranian attacks in and around the Strait of Hormuz. After these 3 commercial vessels were damaged, Trump came out and said tankers and oil companies should still go through the strait, and signaled that the U.S. had made it safe to do so. Although I don't think anyone really believed that, and commercial traffic did not commence after Trump's reassurances. In response to the Iranian blockade or the significant reduction of movement through the strait, the International Energy Alliance, IEA, they launched a record-breaking release or promise of a release of 400 million barrels of emergency oil to stabilize global energy markets, basically try to keep the price down. Just for a little perspective, this 400 million barrel promise is more than double the combined emergency releases deployed in 2022. This just shows you that how severe this potential supply shock is going to be.
And the 2022 releases, those were surrounding the Ukraine war?
Yes, I believe so. And yeah, that was surrounding the Ukraine war, and more importantly, it was there was no threat of the strait being closed, I don't think, at that time, right? It was just a kind of disruption.
Yeah.
and Russia threatening to take oil off the market or something like that, right? I believe that was the case.
And
But
around
even
the
then,
Nord Stream pipeline being bombed or destroyed.
yeah. But even then, no serious oil analyst that I was paying attention to said believed that the oil was going to be taken off the market. It was just going to be kind of become like black market oil. The oil never was disrupted ever. It was still going out. It just was like technically, I guess, not accounted for. But the oil flows never stopped.
Right. And at that time, the emergency reserve release was a fraction of the amount being proposed here now.
Yeah. So this is double. And um, this is seen, as far as I can tell, as it's only a Band-Aid, right? If this were to continue out, I think 30 days, you'd see, I think it's a 8% shortfall in global oil. That seems like a little, like a small amount, but you have to remember oil is inelastic. It's kind of like food. If you don't have enough food, right? Even 1% not enough food, that's a huge disruption. People are going to, you know, be very, very, very impaired by that. So it's not elastic. You can't just be like, oh, you know what, just gonna eat less. Oil is similar to that, where you have to have a baseline of oil, so the demand is inelastic. Anyway, so March 12th rolls around. The Iran's new leader, the previously mentioned son, Khamenei, he gave his first attributed public comments and made clear that Tehran was not backing down. And he said Iran would keep fighting and it would keep using the Strait of Hormuz as leverage, while also striking U.S. air bases. This is obviously not what anyone wanted to hear. And it shows that Iran really does know that it has this kind of, I think, asymmetric strategic advantage, right? The world really needs the Strait of Hormuz. This is why something like this hasn't been really um, been done in the past 30 or 40 years, is because of this incredible vulnerability. And they know it. So, again, not great for markets. Same day, U.S. Treasury yields climbed as bond markets priced in a higher for longer interest rate environment. Higher energy costs means stickier inflation. This means that there's less likelihood of rate cuts. So anyway, the 10-year yield for the U.S. bond went up to 4.24%, and the likelihood of U.S. the Fed reducing or cutting rates shifted all the way out to September, and the market is now pricing one rate cut for 2026. Now,
Yeah,
one
and
rate cut.
actually, what I read this morning is that the actual amount of rate cuts being priced in is just 20 bips. So not even a full point.
Yeah. So, not great for certain parts of the market, for sure. Adding to this volatility, it's already a volatile situation. Trump's nominee, Kevin Warsh, apparently is going to face a Senate blockade when Jerome Powell's term is set to expire May 15th. Again, this kind of political unrest, really bad for markets. And you saw, for example, mortgage rates in the U.S. reach near 7%. Again, you're just seeing this kind of broad, what's it called? More volatility, more risk, and everything is now every aspect of the economy is now kind of pricing higher for this risk.
Yeah, and the real estate markets in the U.S. already kind of on the brink. I've been noticing as well that real estate stocks are down significantly. One of the biggest, the harder hit sectors in equities.
Yeah, definitely. All right, March 13th. This was the biggest day last week for military escalation. So Trump announced that the U.S. had struck, Karg Island, Iran's main oil export hub. They said the U.S. said that they hit more than 90 military targets on the island, but they deliberately did not hit the oil infrastructure. Trump also warned that oil facilities could be hit next if Iran keeps interfering with Hormuz traffic. The global markets ended the week under pressure as the oil shock kind of started to finally rattle equities worldwide. Precious metals.
Yeah, so just on that note, the hardest hit global indices, it seems, are in East Asia, which is perhaps the most affected by the closing of the Strait of Hormuz. So Japan's Nikkei was down, I think, 1.5% on Friday, and other indices in East Asia also hit. Europe also affected the equity markets.
Definitely. U.S. stocks also closed lower. Everybody feeling the pain now, finally. Precious metals were flat, though. But I guess one silver lining for everybody listening here, Bitcoin was surprisingly resilient during this time. We'll see if that lasts. All right. Here we are, March 14th. Trump has made a shift from taking direct action to now asking for help. He, I think it was a Truth Social post, he asked for allies to help reopen and secure the strait. He directly called on naming these nations, China, France, South Korea, Japan, and the UK, to assist with securing the strait. Again, markets are not happy about this, and Brent crude once again surpassed $100 per barrel. You'll recall that it had spiked about 10 days ago to 120, then fell to 80, and now has climbed back up again.
Yeah, currently trading at around $100. Exactly.
Yeah. Yesterday, March 15th, Sunday, this conflict has now, I think, most pundits and news organizations have now clearly moved this conflict from kind of a regional conflict over, I don't know, whatever Israel and Iran and the U.S. were doing, into a broad energy security crisis. And this is the state of play now. Just as a side note, Iran has been in an internet blackout for 16 days, over 360 hours since the conflict started, roughly on February 28th. There have been 99% a 99% drop in internet connectivity. The Iranian foreign minister called this a, quote, necessary security measure against foreign aggressors. And so this still remains an issue within Iran. The interesting thing is, I can't remember who I was talking about this with, but citizens are turning to high-cost black market Starlink terminals and things like VPNs to bypass the blockade. And so you're seeing some internet access through Starlink. We talked about this on Token Narratives, I think.
Yeah,
on Friday, right?
Also on that report, supposedly authorities in Iran are raiding homes suspected of having Starlink terminals, and also targeting people who are using VPNs of any kind.
Yeah. All right. So as Graham, you often ask after these long these long summaries. What
What
does
does it all
this
mean?
all mean?
What does it mean for
What
my
does it all
bags?
mean? Well,
'Cause
first of
that's
all,
obviously,
the
look,
most important thing, yeah.
it's the most important. Yeah, no, it's not.
Okay,
But that's what we're here for.
yeah. So basically, the chances that this conflict will not have a material effect on the world economy is now a big zero. That's the kind of high level bad news. Is from everyone that I read and pay attention to, the impairment that has already happened now, which we still really haven't felt, right? All the stuff that we've talked about in the market's reaction, markets are forward looking. So this is what they're anticipating. We actually haven't felt the shock really yet, right? That's coming. But what's already baked into the cake is is not good. If it were to stop today, if things were to resume where they were 2 weeks ago, um, we have a shock coming, and it's not going to be pleasant. So this is gonna affect things probably for the next 6 months to a year minimum, right? Um, Everyone now is scrambling to adjust the kind of their risk profiles for what they think will happen and how bad the impairment will be, and then making new strategies for kind of each slice of that probability in those scenarios. Um, so all these oil experts are talking about, like, okay, we've had 2 week impairment. What happens if it becomes 4 weeks? What happens if it becomes 6 weeks? What happens if it becomes 8 weeks? And basically, the weird thing, I don't know if you've listened to any of these people. They're basically like saying a 3 month impairment is kind of next to impossible, because a 3 month impairment basically means the physical facilities that produce oil have to be completely shut down, right? And to restart them after that would take a long, long, long time in which they would not be producing any oil whatsoever. So that's kind of like I don't know, like a what do you call it? Like uh, a
Yeah.
hard limit, like a I don't know.
Oh well, interesting. I mean, yeah, you can't just turn it on and turn it off easily. The oil flows like it's there's a lot of moving parts there.
Well, they've already reduced it, right? I don't know if you know this. Last week they I think the Saudis and some other oil producers in the area, they already announced that they've reduced the supply down to like almost the bare minimum. Now, so even that reduction, once you do that, once you reduce the flow down to a lower level, to then bring it back up to the normal level takes 2, 3, 4 weeks. So even going into this kind of maintenance mode, um, will have major repercussions, right? So that's already going to happen. Now, the longer this impairment goes, they might actually have to kind of turn off the supply in general, and then that takes much longer to restart. So that's kind of the high level. Now, in terms of your bags, obviously oil up, right? Seems like oil's going to be up bigly. Equities probably down. Weirdly, right now, U.S. bonds are in a kind of weird place. As I said earlier, the yields of U.S. bonds have gone up, which means the price of bonds have gone down. So you're not seeing a flight to safety, right? Bonds are not seen as a flight to safety because of the inflation fears. So you're in this kind of like lose-lose situation where you want to go to like a safe haven asset like the U.S. Treasuries, but yields are going up. Probably might go up more because of inflation. Strangely, again, weird world, gold flat to maybe down, at least in the short term.
Yeah, what's the theory there?
So as if let's say equities
It's
hit
basically
a
a
pocket here.
liquidity play.
it's two things. You have the liquidity play, which is you sell your most liquid, most valuable asset that hasn't gone down to support your other like underwater positions, and or just to like move into something even more secure. But also the dollar, U.S. dollar, has gone is strengthening, and traditionally when the dollar goes up, gold does not tend to go up, right? I mean, it's
Okay,
kind of mechanical.
interesting. I'll just bring in an interesting theory I heard from a gentleman by the name of Andy Scheckman.
Okay.
He's a gold bug, and he's convinced that what happens here in these geopolitical conflicts is that the powers that be, let's call it, manipulate the market to prevent gold from rising, to actually make it go down in these crisis moments, because they know that at the moment market participants see an asset like gold performing well in this kind of geopolitical chaos, that's extremely dangerous for like the current structure of the system. So they try their best to suppress the price during these conflicts so that that narrative can't take hold, because it's an extremely dangerous narrative from their perspective.
Yeah. That is interesting. I mean, I don't know if that would be applicable now. I feel like the powers that be have their hands full with like juggling like this oil situation. But I mean, yeah,
Well, there's
okay.
like 8 million people working in the U.S. government, or whatever it is, 30 million. So I'm sure there's a few people who got their eyes on things like that.
And then, of course, Graham, the one asset class that I didn't mention would be Bitcoin and crypto. And my guess is that you would see, at least in the short term, it go down. It would go down with
Yeah.
everything else. So that's
Well, interestingly, of course, Bitcoin has been surprisingly resilient during this conflict. So,
yeah,
who knows what the reasons are for that? But I would agree with you in principle that historically, Bitcoin is just a proxy for like tech. And if tech is broadly like equities, and especially tech, are the industry that's like the most inflated in terms of asset prices, you would expect that Bitcoin would follow that down. Although, as we've discussed, a lot of people see Bitcoin as the canary in the coal mine. It leads these moves, and maybe the Bitcoin market participants had already figured out that something big was going to happen, and de-risked already. So that's another possibility.
yeah. Although I don't. I mean, the move, the U.S.'s move to do this in Iran was well telegraphed by weeks and weeks. I don't know if anyone thought it would turn into what it is, which is kind of this energy crisis. I don't know how many people were really thinking it would go this way. So anyway, here we are. I think basically though the thing to do is just to kind of be risk off, which is why I think what everyone's doing, which is you don't know what's going to happen, right? This
Yeah.
could be over this week, maybe, or this could go on for another 2 or 3 weeks, and every week that it goes on longer, because you're dealing with like a physical commodity, a kind of a toxic physical commodity, the repercussions are kind of like non-linear, you know, and so it's got a weird kind of uh, impairment effect that I don't think most of us are familiar with, or have a working memory of. So I personally am just trying to be like as risk off as possible and just kind of do nothing and see what happens.
It's probably good advice. All right, let's a little bit away from the war stuff, and let's bring up that Bitcoin has just recently hit the 20 million BTC mined milestone. So it's now been a little over 17 years since the launch of Bitcoin in January 2000. And 20 million of the total supply of 21 million has now been mined. That's a little over 95% of the total supply. And it leaves just 1 million coins to be produced over the next century as the network's programmed scarcity tightens and the issuance slows through the future halving cycles. So much less Bitcoin coming on the market, at least from the mining perspective. And we've hit that 20 million milestone, which is pretty incredible.
Is this just a kind of a marketing story, Graham? Um, this feels like not something particularly relevant in terms of an effect on actual price, and maybe more mimetic.
It's just it's a milestone. So there's now less than 1 million Bitcoin to be mined ever.
Right. Okay.
So
sounds great.
All right.
Okay.
Okay. Meanwhile, so Bitcoin mining is contributing less and less to the stock of Bitcoin. So it makes sense, this story here, which says that Bitcoin treasury firms are on track to absorb 10 times the daily mined Bitcoin supply. And we have a quote from Blockstream CEO Adam Back. He says, treasury companies soon will likely reach 10x mine daily supply collectively via common stock and preferred at the market raises, such as STRC and MSTR. And he goes on, recurring 20K Bitcoin per week buying might over time turn the market as it absorbs, then overwhelms remaining sellers. Of course, Strategy is the biggest Bitcoin treasury company. They now have nearly 750,000 BTC, valued at around $52.5 billion. The Strategy's latest purchase, which was disclosed last week, was 17,994 BTC, purchased for approximately $1.28 billion at an average price of just under $71,000.
Yeah, this is an interesting. I guess I haven't heard that much good news out of the DAT industry, right? For a while. So this is kind of the first decent story about like DATs maybe helping out again. I would have to go into the details of this. Like, is he basing this off of the purchases of DATs recently, like in the past month or two, or is this is he using data over a longer term trend? Do you know what I'm talking about? Like, how is he measuring the rate at which these DATs are buying Bitcoin and then projecting that forward? You know what it reminds me of? Do you know that meme of that father who's holding his 2-month-old baby, and it says like, he was like, "Holy crap, my baby doubled in size in the past month. Projecting forward 5 years, he'll be bigger than the Earth." You know, something like that.
Yeah. Well,
So,
anyway,
again,
I mean, the other thing is that the supply of Bitcoin brought onto the network, onto the market via mining, is increasingly insignificant compared to the supply that's held, OGs, certain entities. So that's the bigger, I mean, it's kind of 10x the supply of Bitcoin that's mined could be vacuumed up by DATs or treasury companies. It's kind of a vanity metric when you're kind of ignoring that there's a much bigger supply out there.
Yeah.
that's not from mining.
Also, the turnover of that supply, right? Like, so people buy it, and then how long do they hold it, and then sell it, right? So,
Yeah.
but again, like I'm all for some good news on DATs. I feel like they've been beaten down pretty hard, and so
Okay.
let's
Now, yeah, another thing that's sort of beating down Bitcoin is the perceived quantum threat. And on that note, there's a new research report published by ARK Invest and a Bitcoin-focused financial services company called Unchained. And they're saying that, yes, quantum computing does pose a long point, but it's unlikely to threaten the network anytime soon. So basically, yeah, the report says quantum advances will occur gradually, but it'll give developers and investors time to implement post-quantum security upgrades. And on that note, several initiatives are underway across the Bitcoin and crypto ecosystem. Exchanges like Coinbase have established quantum advisory boards, while the Bitcoin developers are discussing proposals such as Bitcoin Improvement Proposal 360, which explores new address types designed to withstand quantum attacks. There is, of course, the issue of what to do with the so-called lost coins, and that is something that will have to be debated by the Bitcoin community in the future. Anyway, I just wanted to bring up this report because, there's been a lot of quantum FUD, and it seems now that we're getting more and more measured analysis of actually, it's not that big of a threat, at least in the near term.
No, 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 no. So
David.
Yeah. My reaction to this was I saw you put it in the docket, and I laughed. I had a big hearty chuckle because you're firmly in the camp that this is, as you put it, FUD, and I would put myself in the camp of no. This is a threat. It's not what's it called? It's not unfounded. Yeah, it's not unsubstantiated. It has to be addressed, and it should be addressed now. And so it's not fear mongering for, I don't know, some kind of like the Chicken Little, the sky's falling kind of thing. So I think I often put stories in this or token narratives on the side of like, yep, Bitcoin community needs to get its head out of its butt and take real actions rather than just kind of navel gazing and proposing new BIPs and then pointing to the BIPs and saying, "Oh, look, we're doing something. I wrote something in a forum, and look, I put a post in the Bitcoin email chain. This is progress." Versus actually doing something with like Ethereum and some of these other projects where they're actually spending money.
Some of these other centralized chains where there's a clear like a figurehead who can say, "Oh yes, we've got it under control, sir." So David, once again, fundamentally understanding the decentralized nature of Bitcoin.
So Graham, Graham keeping his head firmly in the sand as the storm approaches.
Okay. Perfect segue to Boris Johnson, the Boris Johnson story, which is that, out-of-date politician yells at Bitcoin, calling it a Ponzi. So, yeah, Boris Johnson, former president, not president, the leader of the nation's, the British Union, I don't know what it's called, Prime Minister?
United Kingdom?
The king of the kingdom. I don't know. Anyway, this guy with the funny hair, calling Bitcoin a Ponzi. David, in our little pre-show, this is 2020 era. A 2020 era take.
Yeah, it's dated, right? Calling Bitcoin a Ponzi is like a Charlie Munger. I don't know, Larry Fink circa 2017 kind of attack. I just feel like it doesn't have any teeth. It marks you as an okay boomer, Very, very kind of a cringe, roll your eyes, nothing to see here, move along, granddad kind of thing going
Yeah.
on here.
And it's funny because the story Boris Johnson mentioned, which led to him calling Bitcoin a Ponzi, is someone he knows in a pub in England got scammed by some crypto scammers and like basically is down £20,000 or something, which has nothing to do with Bitcoin, of course.
It's also kind of funny, like you just hear these numbers, like his friend in a pub lost £20,000. I bet you that that's like that's pocket money to his friend as well. So it also seems out of touch for that. It's like, yeah, my friend on a whim he got a Nigerian prince scam and he just lost £20,000. I don't know, whatever, dude. Get out of here, man.
Okay. All right. For our last segment of the weekly, let's go through some stablecoin news because that is one segment of the crypto economy that most people think is not vapor, not a Ponzi. And on that note, we have Stanley Druckenmiller, the Wall Street legend, who, by the way, has long been a critic of the crypto space, saying that much of the industry felt like a, quote, solution looking for a problem. But Druckenmiller said with, I forget who, but he's saying that stablecoins are not in that bucket. And he's predicting that within 10 to 15 years, the machinery moving money around the planet won't rely on swift wires or card networks, but it will be on blockchain powered stablecoins that settle transactions faster, cheaper, and without bankers checking the clock.
10 to 15 years. That sounds too slow to me. I don't know. But yeah, otherwise, absolutely. No brainer.
Yeah, no brainer. Now, the issue is the one question around this is how that will affect dollar dominance. So interestingly, Druckenmiller said he suggested that the dollar might not remain the world's reserve currency indefinitely. And he did acknowledge that stablecoins could extend the dollar's reach in the digital era.
Yeah. See about that, Mr.
All right.
Druck.
So the stablecoin economy, by the way, has now hit a new milestone, crossing $315 billion in issued stablecoins. And interestingly, USDC is gradually taking share away from USDT. If you look at the on-chain metrics, USDT still accounts for more than half of all stablecoins in circulation, but USDC catching up quickly. And I think this is largely due to the regulatory certainty in the US after the passing of the Genius Act. And USDC, of course, Circle, a US business, while Tether sort of had to scramble and put up a US version of Tether.
Yeah. So, but that's what I was going to ask you. Does this count USDT and the Tether US certified version as separate stablecoins?
It's a good question. Either way, the US version of Tether, I think, is still a very small market cap.
Yeah. But I'm just wondering if Tether is now focusing more on growing that new coin. Still the same company, but yeah.
I wonder as well. So that'd be a good question to pose to our boy Paolo Arduino next time we got him on the pod.
That's right. Very, very good.
Okay. Now, it's not all roses and flowers and cake in the stablecoin world. In Argentina, the CNV, which is the Argentine equivalent of the SEC, has reported that, which is a Argentine peso-linked stablecoin, constitutes a security and is therefore subject to the regulatory regime for capital markets. And so there's a stablecoin in Argentina called ARGT, and it's issued by a company called Twin Finance, and it's listed by Bello, and it offered up to 32% APY. So this seems to set a precedent in Argentina where linking the offering of rewards for holding a stable coin, making that a security, this closes the potential savings use case for Argentine peso stablecoins. So there's no other regulation in Argentina tackling this issue.
When you see numbers like 32% APR, what do you think, Graham?
I think scam.
Yeah.
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 So
yeah.
I mean, I don't know what's going on with that particular stablecoin, but yes, it does seem suspect, and you could see why the Argentine regulator would be looking into that and saying, okay, this is a security, because how could they offer that APR? It seems risky.
Yeah. Well, I mean, you do have this like in sovereign bond markets, right? Like I think was it Turkey a couple years ago? They had their bond, their like whatever it is, 10-year, 20-year bond, and it was some ridiculous coupon rate of like 20, 30, 40% or something like that. And you're just like, whoa, okay. Yeah, that's a red flag.
Okay. Meanwhile, MetaPlanet, which is of course the big Japanese-based Bitcoin digital asset treasury company, they announced a strategic investment in JPYC, the JPYC stablecoin, through their new venture arm. And so the news is that MetaPlanet executed a letter of intent to invest up to around $2.5 million to, quote, bolster Japan's digital settlement infrastructure. So in some countries, there's clearer regulation and local currency stable coins are going ahead, while in others there's a dearth of regulation. Some sort of rogue or maverick companies spinning up products, they're getting shut down by regulators due to the lack of regulatory environment or rules for it. So we're just seeing this sort of bifurcation. Some countries moving ahead, some stopping it. It's interesting as to see this play out.
Yeah. So MetaPlanet has a big meeting. Maybe it's like a yearly shareholders thing. Anyway, so it's a one-day event next week, March 25th. I'll be there, and we'll be doing some interviews and covering the event. And I'm sure there'll be more information about this, and I'll be sure to ask some of the people that I'm going to interview on this specifically. And that'll be I think it's in Yokohama. So I'll be there next week to cover that MetaPlanet thing. And I am curious to know more about this and how it fits in with the work they're doing to integrate or to offer dollar-denominated stablecoins. I think Circle now has the authority to have a USDC-ish instrument here in Japan. Again, it'll be very interesting to see how this all fits together.
All right, let's wrap it up there. Thank you, David, and thanks everyone for listening. Have a great week.